What will be the most valuable cryptocurrencies in January 2022? Cryptocurrencies are poised for another record-breaking year as risk-taking investors seek high returns. The following are the top cryptocurrencies in January 2021. Last year, cryptocurrency valuations reached all-time highs, aided by high-profile support and mainstream interest from investment banks. The sometimes surprising returns they can provide buyers entice brave and bullish investors looking for higher returns than savings accounts and stock markets. However, cryptocurrencies are extremely volatile when compared to more stable, lower return investments. And, while there have been some huge price increases in the last year or so, there have also been some cliff-edge collapses. Valuations can fluctuate wildly depending on sentiment, celebrity endorsement, or regulatory crackdowns, and there are far fewer investment fundamentals than there are for banking stocks or funds. Because cryptocurrencies are unregulated, there is a much higher risk of being scammed. It's critical to do your homework so you know who is behind the coins and what they're for. The Financial Conduct Authority, a City of London watchdog, has warned that this is a high-risk investment in which investors should be prepared to lose all of their money. There are two key figures in cryptocurrency. There is the value of a single coin as well as its market capitalization. The market capitalization is calculated by multiplying the price or value of a single coin by the quantity of coins in circulation. As of January 4th, the following cryptos were ranked by market capitalization. Bitcoin. Bitcoin is the first and largest cryptocurrency, with a market capitalization of $887 billion and a market share of nearly 40%. The cryptocurrency was created in 2009 by a mysterious founder named Satoshi Nakamoto, who wished to create a peer-to-peer online currency that could be discovered or mined online and used without the supervision of banks. Last year, the price of a single Bitcoin reached record highs as cryptos boomed, aided by Elon Musk's support, interest from major financial institutions, and support from major tech finance firms such as PayPal. Its value peaked at more than $68,000 per coin in August, but has since dropped to under $47,000 due to bans in China and India. Ethereum. Ethereum, the second largest cryptocurrency, was launched in 2014 to compete with Bitcoin by providing more user-friendly blockchain technology that other cryptocurrencies can use. It has a $458 billion market capitalization and a single Ether costs $3,859. Ethereum also reached new highs last year, but there have been significant drops as a result of regulatory restrictions. Nonetheless, some analysts believe Ethereum will one day overtake Bitcoin. Binance Coin. Binance Coin was launched in 2017 by Binance, the world's largest cryptocurrency exchange. It was initially created to provide discounted trading fees to Binance users. However, it can now be used to pay transaction fees on Binance as well as to purchase items on websites such as crypto.com. A single Binance coin is currently worth $517, with a market capitalization of $86.2 billion. Tether. Tether is a cryptocurrency that is distinct from Bitcoin and Ethereum. It is referred to as a stablecoin because its value is linked to regular fiat currency, such as the US dollar. Users are said to be able to store, send, and receive digital tokens backed by their preferred currency. Tether claims to keep its value stable by storing currency reserves in a bank. It has a market capitalization of $78.2 billion, and a single Tether or USDT is worth $1. Solana. Solana is a new cryptocurrency that was launched in March 2020. It has sparked investor interest and excitement by claiming that its blockchain technology is faster and more efficient than Ethereum's. The cryptocurrency is worth $172 and has a market capitalization of $53 billion. Cardano. Charles Hoskinson, one of the 8 co-founders of Bitcoin rival Ethereum, founded Cardano in 2017. It aims to be more transparent by allowing its investors to have a say in how the cryptocurrency is run. Cardano, which has a market capitalization of $44.9 billion, reached its all-time high on May 17 when its US dollar conversion reached $2.3091. The increase followed reports that its parent company, Input Output, had partnered with World Mobile Group, a blockchain-based mobile network. Cardano has also benefited from celebrity endorsements. Gene Simmons of the rock band Kiss backed it in March, tweeting that he'd spent $300,000, £216,223, on it. A single Cardano or ADA coin costs $1.34 at the moment. US coin. The USD coin, USDC, is yet another stablecoin whose value is tied to the value of the US dollar. Every unit of USDC purchased is backed up by $1 in reserves, which can be cash or short-term treasury bonds. Circle, a fintech firm, and the Coinbase cryptocurrency exchange launched the digital currency in 2018. It recently surpassed XRP to take 7th place in the cryptocurrency market capitalization rankings. Its $42.68 billion market cap and $1 price make it one of the few major cryptos to have increased in value in recent months. XRP. XRP is a type of digital currency that can be used to send money between individuals or banks through the Ripple network. For example, if you need to send euros to someone who only accepts dollars, the Ripple network will convert them into XRP to expedite and lower the cost of the transaction. It was founded in 2012 and currently has a market capitalization of $39.8 billion. A single XRP is now worth $0.836, down from a high of $1.84 in April 2021. Luna. Luna, another recent riser in the crypto top 10, has recently surpassed popular cryptos such as Dogecoin and Shiba Inu to enter the big leagues. It is the primary token used on Terra's blockchain technology, which was launched in 2019 to compete with Ethereum by offering a payment system that links cryptos to fiat money to keep values stable. A Luna currently costs $88.30 and has a market capitalization of $31.8 billion. Polkadot. Polkadot is yet another new cryptocurrency on the market. It only debuted in May 2020 and supports asset and token transfers across multiple blockchains. A single Polkadot or dot now costs $29.55, down from a high of $54 in 2020. Its current market capitalization is $29.2 billion. Tether, a stablecoin issuer, has frozen $1 million in USDT. Tether froze more than $1 million in USDT in a private digital wallet last week, effectively rendering it unusable. Etherscan, an Ethereum block explorer, revealed that the #1 stablecoin issuer froze the 1.09 million USDT on December 30. A Tether spokesperson told the block that the action was taken at the request of an unspecified regulator or law enforcement agency. While the company declined to comment on the specific case, it did say that by freezing of addresses, Tether has been able to help recover funds stolen by hackers or are compromised. The move highlights a major issue that many in the crypto community, particularly privacy advocates, see as a major issue with stablecoins. Stablecoins, unlike traditional cryptocurrencies such as Bitcoin, can be frozen in the same way that funds in a bank account can. It's one of the reasons proponents of decentralized finance advocate for the use of DeFi stablecoins like Maker's DAI, which are not controlled by a centralized authority that could freeze cryptocurrency. Tether is not the only stablecoin provider who does this. Grant Thornton, a top 10 global auditing firm, noted in its audit of USD coin issuer Circle Internet Financial's cash reserves on September 20 that it has the ability to block individual USDC public blockchain addresses from sending and receiving USDC. This ability is known as blacklisting. When an address is blacklisted, it is no longer able to receive USDC, and all USDC controlled by that address is frozen and cannot be transferred on-chain. Individual USDC tokens cannot be blacklisted. At the time of the audit, there were 100,000 blacklisted USDC tokens in circulation. Binance USD, the third most valuable stablecoin, is not freezable, according to Binance CEO Changpeng CZ Zhao in a tweet on August 10, 2021, following the $612 million Poly network hack. While we cannot freeze funds on blockchains, if those funds arrive on our Binance exchange, we will try to freeze them, he said. As a result, we'll be doing a lot of blockchain analysis. Nothing is simple. We make an effort. Helping the authorities. Freezing stablecoins may be controversial, but it is a significant benefit in the eyes of regulators and law enforcement agencies, who have been stepping up their efforts and capabilities in tracking down cryptocurrencies used in illegal activities ranging from ransomware to dark market drug sales and even terrorism funding. You might be interested in: the Department of Justice establishes a national cryptocurrency enforcement team. Tether CTO Paolo Ardoino made this point on Twitter last year, following the hacking of the Yearn.Finance decentralized finance (DeFi) protocol in February. Tether immediately froze 1.7 million USDC tokens. Ardoino defended the move on February 6, stating that USDC is a centralized stablecoin and that among Tether duties is the responsibility of acting and collaborating with law enforcement and regulators regarding potential dangerous behavior. It's also sound political strategy. During the Senate Banking Committee's stablecoin hearing on December 14, Senator Elizabeth Warren proposed prohibiting U.S. banks from holding the cash assets used to back stablecoins and protect the dollar's peg, and she gave an open floor to a witness who called for an outright ban. Many of the US-based exchanges attempting to stay on the good side of regulators, such as Coinbase, Kraken, Gemini, and FTX.US, routinely freeze funds in the same way that any bank or brokerage would. In fact, many non-US exchanges do so for reasons unrelated to regulators or law enforcement. They see it as supporting the crypto community and defending it against thieves and hackers. At the same time, those exchanges make the case that they vigorously oppose unreasonable law enforcement and regulatory requests for customer information, with Coinbase Chief Legal Officer Paul Graywell saying in a transparency report published on December 15 that we respect the key role of law enforcement and government agencies in pursuing bad actors who engage in prohibited activity or seek to abuse our platform. Graywell, on the other hand, stated that protecting our customers' financial privacy is a fundamental part of our commitment to being the most trusted place to engage with cryptocurrency. His stance suggests a compelling reason why regulators would prefer to deal with stablecoin issuers. It's much easier to deal with a few stablecoin issuers than dozens of exchanges. On the other hand, when companies like Tether and Circle freeze their stablecoins, it only prevents bad actors from profiting. When exchanges freeze the cryptocurrency in their wallets, the rightful owner can retrieve it. If I could only buy one cryptocurrency in 2022, this would be it. In 2022, there will be opportunities for investors to purchase high-quality cryptocurrencies. But if you could only buy one, I'd go with this one. After 2 years of significant growth in cryptocurrency popularity, there is a significant revolution underway. Speculation is no longer limited to investors. There are several high-potential projects with a plethora of growth opportunities. Finding a high-quality cryptocurrency to buy in 2022 is a wise choice if you're looking for a high-potential growth investment. However, there are a few things you should know about cryptocurrencies before deciding to commit and invest your hard-earned money. First and foremost, you should learn about the coin and the projects to which it provides exposure. Is it used to purchase goods as a digital currency, or as a token to invest in decentralized finance, DeFi, projects? It could even be used to purchase digital land in one of the many upcoming metaverse projects. Determining what the coin or token does will aid in determining its worth. If the use cases it provides have real value or distinguish it from the thousands of other tokens on the market, it should have a lot of long-term potential. With that in mind, here's one of the best cryptocurrencies to buy in 2022. One of the best cryptocurrencies to buy and hold in 2022. All of the projects built on blockchains offer some of the best opportunities for investors today. New projects are being created on a daily basis because several of the most widely used blockchains are smart contract compatible. Play-to-earn video games, NFTs, DeFi, and even popular metaverse projects are examples. As a result, each of these individual projects, as well as the blockchains on which they operate, has enormous growth potential. Phantom, which has the native token FTM, appears to be the best investment for 2022 in my opinion. One of the first and most important reasons Phantom has potential is that it is an Ethereum-compatible blockchain, which means that projects built on Ethereum can also be built on Phantom. Furthermore, it means that investors can easily connect cryptocurrencies like stablecoins from any Ethereum-compatible blockchain network to Phantom. This ease of use is critical for attracting new users, and it incentivizes developers to launch their projects on the network as well, making it one of the best cryptocurrencies to buy in 2022. How to calculate Phantom's value? As more investors look to invest in DeFi projects, a blockchain like Phantom has a lot of promise. Other Ethereum-compatible chains, such as Polygon, Avalanche, and Binance Smart Chain, are all among the top 14 cryptocurrencies by market cap, with Polygon having the lowest market cap of the three, valued at approximately $18 billion today. Meanwhile, Phantom is the 28th most popular cryptocurrency, with a market cap of only $7.5 billion, despite a 30% rally in the last 7 days. The network, and thus its currency, are becoming increasingly popular. However, because it is still so cheap, it represents an incredible opportunity right now. In fact, Phantom's market cap to total value locked ratio, one of the best ratios for determining a token's value, is quite low at 1.25. As a result, the token should continue to have a lot of upside, making it one of the best cryptocurrencies to buy in 2022. In comparison, the market value to TVL ratios for Ethereum, Binance Smart Chain, Avalanche, and Polygon are 2.3 times, 5.4 times, 2.2 times, and 3.1 times, respectively. So, clearly, Phantom is the cheapest of the bunch, with a market cap to TVL ratio of just 1.25. As a result, with all of these cryptocurrencies' potential and Phantom's low price, if I could only buy one token for 2022, Phantom would be my first choice. Investing in this tiny TSX stock could be akin to purchasing Tesla in 2001. Our team of diligent analysts at Motley Fool Stock Advisor Canada has identified one little-known public company founded right here in Canada that is at the forefront of the space industry and recently completed a transformational acquisition, all while turning a tidy profit. The best part is that, in a market where many stocks are trading at all-time highs, this stock appears to be trading at a very reasonable valuation, for the time being. Cryptocurrency potential side effects. In fact, the modern way of life necessitates spending a significant amount of time in the digital world. Almost everything a person does nowadays has an online equivalent, such as working, studying, communication, financial operations. When people celebrated the new millennium, reality changed dramatically from what it had been in the past. Could medieval people have imagined having all of their money on a single plastic card? You can even do without this tiny square these days, storing all costs in an online wallet. Furthermore, the variety of digital currencies available is now greater than ever, including Bitcoin, Litecoin, Ethereum, USDT, etc. Indeed, many people are optimistic about the impact of cryptocurrencies, and there are several reasons for this. However, it is also important to keep in mind the potential side effects of cryptocurrency. Let's dissect some contentious aspects of digital currencies. The environmental impact. Without a doubt, the first point of contention raised by crypto opponents is climate change. Everyone has probably heard about such a problem through the media or at school. Regardless of how much attention it receives from the media, the disclosure is insufficient. For example, eco-activists have been fighting the oil and coal industries for decades, but the results have been almost imperceptible. The crypto industry is in a similar situation. Unfortunately, this economic sector has become just as dangerous as the previously mentioned spheres. Just consider this: crypto mining consumes up to half of global energy consumption. Clearly, renewable energy is not a viable option for meeting such demands. As a result, miners take the easiest route and use electricity generated by coal or peat burning. The main issue is a lack of centralization and control in the crypto world. As a result, assigning blame for a massive carbon footprint to anyone is impossible. Regrettably, such a method only works with governments and corporations that are afraid of sanctions. However, there is one weapon for combating dangerous crypto farms: negative media representation. When an influencer sells their tokens, the price may fall as a result of the domino effect. The same thing happens if a celebrity has a negative opinion about a cryptocurrency. Unpredictability. Sure, unpredictability is a nightmare for anyone who works in the financial sector. Hours or even seconds can be critical depending on what a person does. The more unexpected factors that affect the situation, the more difficult it is to forecast. Cryptocurrencies are undeniably one of the most volatile phenomena on the planet. The unusual nature of crypto is most likely the source of this issue's legs. Because people are still learning how to use it and make accurate predictions, errors and misunderstandings are unavoidable. Indeed, such uncertainty frequently results in dangerous side effects. The more you invest in digital tokens, the riskier the deal becomes. Even experts face the possibility of going bankrupt overnight. Investors will be in trouble if a specific currency's demand falls precipitously for any reason. Just keep in mind that any digital coin's popularity can wane in the future. Hacking. In your mind, what does a thief look like? You'd probably describe a stereotypical burglar wearing a mask and carrying a bag of cash behind their back. Modern robbers, on the other hand, have a distinct appearance. They are virtually indistinguishable as they work from their computers. Whenever a large storage of value appears, there is always a long line of enthusiasts eager to get a piece of the action. This rule also applied to cryptocurrencies. Yes, hackers existed long before the first digital currencies. Soon after, cybercriminals shifted their focus and began looking for valuable tokens. What do most hackers do? They are well known as computer geeks who write code and create malicious viruses. A skill like this is useful for someone who wants to unlock someone else's crypto wallet. There are, however, several schemes for making money through cryptocurrency hacking. Secretly mining on a stranger's computer. Taking money directly from a cryptocurrency wallet. Sending a virus in order to sell antivirus software. Significantly, as the crypto industry grows in popularity, so do the number of hackers. Fortunately, special services such as the FBI are on the lookout for them in order to protect users. Furthermore, some cyber criminals emerge from the shadows to become white hackers who test the security systems of businesses. Increased crime rates. Another serious side effect of cryptocurrencies is an increase in a variety of crimes. Because crypto operations are completely anonymous, they allow for illegal transactions. The modern shadow economy's scales are truly terrifying. It's difficult to believe, but today there are more slaves than at any other time in human history. Human traffickers benefit greatly from decentralized payment systems. Consider the international drug dealing industry, which gladly employs cryptocurrency. Furthermore, with digital money, corruption becomes easier. Indeed, the crypto industry is not to blame for all of these heinous crimes. They exist with or without decentralized payment systems, but their lack of control makes crypto unpopular. Scams. Both children and adults are aware that conversing with strangers can have unintended consequences. Unfortunately, many people disregard any warnings as soon as they see a profitable opportunity. In reality, they hook up with sly con artists who are well versed in human psychology. When it comes to scams, the crypto world is hardly an exception. A new internet user may easily confuse a genuine deal with a bogus advertisement and incur losses. A bright red pop-up banner, for example, that promises huge profits with minimal risk is most likely a lie. You should double-check the details of this transaction first. Similarly, scammers advertise phony cryptocurrency wallets only to leave you with empty pockets. Even if the advertisement mentions a safe place to store your tokens, you should conduct preliminary research. Scams happen everywhere, and cryptocurrencies aren't the source of all evil. However, the number of unpleasant cases is constantly increasing, so keep an eye out. Conclusion. Overall, it is difficult to say whether the crypto industry has more positive or negative aspects. As beneficial as blockchain and tokens can be, new problems emerge on a regular basis. Because these side effects are of a different nature, they necessitate one-of-a-kind solutions from bright minds. Perhaps the negative impact will lessen in the future. Experts predict that 3 more countries will make Bitcoin legal tender this year. El Salvador took the plunge in September. According to one expert, 3 other countries could do the same in 2022. El Salvador made history by making Bitcoin, BTC, legal tender within its borders in 2021. Its authoritarian president, Nayib Bukele, tweeted this week that he expects 2 more countries to follow suit in 2022. However, he is not the only one who believes this, with finance expert De Vere Group chief Nigel Green agreeing with the eccentric Central American leader. "I'd go even further than he did," Green said. "I believe that 3 more countries will likely follow El Salvador's pioneering, future-focused lead into the digital age. Bitcoin has the potential to replace the US dollar as a stable currency. For decades, citizens in developing countries have used the US dollar as a stable currency, as opposed to local fiat, which can change dramatically in value overnight. However, Green pointed out that this practice can have unintended consequences. Reliance on another country's currency also brings its own set of, often very costly, problems, he explained. A stronger US dollar, for example, will weigh on emerging market economic prospects, given that developing countries have accumulated so much dollar-denominated debt in recent decades. It's no surprise that low-income countries would consider adopting Bitcoin as a limited supply international currency. By adopting cryptocurrency as legal tender, these countries instantly have a currency that isn't influenced by market conditions within their own economy, nor directly by the economy of just one other country, Green explained. Because Bitcoin operates on a global scale, it is influenced by broader, global economic changes. Which countries are likely to make the leap in 2022? Green named several candidates who could help Bitcoin achieve legal tender status in the coming months. They are all in El Salvador's neighborhood: Panama, Paraguay, Guatemala, and Honduras. Panama announced a bill to make cryptocurrency legal tender in the country shortly after El Salvador's adoption back in September, Green explained. Congressman Gabriel Silva also tweeted that this could lead to job creation in Panama and attract investment from other countries. A bill to regulate cryptocurrency trading and mining was recently passed in Paraguay. Does this represent the first step towards making Bitcoin legal tender? Honduras and Guatemala, according to Green, are currently investigating central bank digital currencies. However, I believe they will eventually accept an existing cryptocurrency as legal tender, as El Salvador has. Green believes that once the second and third countries follow El Salvador's lead, there will be a snowball effect for legal tender adoption around the world. Bitcoin to reach $100,000? Bukele also predicted that Bitcoin would reach $100,000 in 2022 in his English-language tweet. On Tuesday afternoon, Australian time, it was worth $46,199. He also predicted that Bitcoin would become a major election issue in the United States during the midterm elections later this year. Many people in developing countries do not have bank accounts because they are wary of untrustworthy financial institutions. Cryptocurrencies, according to Green, could help those economies boost financial inclusion for individuals and businesses. I am confident that the young, daring president, Nayib Bukele, is correct in his prediction that other countries will accept Bitcoin as legal tender in 2022. The top 7 stablecoins to invest in. Stablecoins are a good option for cryptocurrency investors looking for a hedge against volatility. Stablecoins are a less volatile cryptocurrency than traditional cryptocurrencies. Although cryptocurrencies are valuable, many investors are concerned about their price fluctuations. Bitcoin's value has increased by over 1,000% in the last 3 years. Over that time, the coin's value has also dropped dramatically. These price swings are simply too much for some investors to bear. Stablecoins are cryptocurrencies whose values are linked to another asset such as the US dollar, a commodity, or even other cryptocurrencies. As a result, the currency's price remains more stable. J.R. Willett first proposed the concept of stablecoins in a white paper that was published online in 2012. They've skyrocketed since their inception. The total market capitalization of the world's stablecoins exceeds $150 billion. Here's a list of the top tokens in this category, ranked by best stablecoins. Tether, USDT. Tether, the world's first stablecoin, was founded in 2014 as Realcoin. It's also by far the largest, with a market cap of $78 billion. Tether, a fiat-based stablecoin, was first described in a white paper published in 2012. In other words, the value of each coin is roughly equivalent to the value of $1 held by the parent company Tether Operations Limited. This means that the coins can always be exchanged for an equal amount of money in the United States. Despite paying a 2021 settlement to the New York Attorney General's office over allegations of a lack of financial transparency, an auditing firm Moore Cayman reported in June 2021 that Tether's reserves held for its digital assets issued exceed the amount required to redeem the digital asset tokens issued. Investors Observer, a market analysis firm, rates the coin as low risk, implying that price manipulation is unlikely. DAI, DAI. According to the white paper on MakerDAO's DAI stablecoin, DAI is generated, backed, and kept stable through the use of Ethereum-based currency deposited into MakerDAO's vaults. This deposited cryptocurrency serves as collateral for withdrawals of DAI currency by the user. Because the deposited cryptocurrencies are worth more than the US dollar, MakerDAO is able to keep its stablecoin pegged to the US dollar at a 1-to-1 ratio. This theory piqued the interest of some investors, as venture capital firm Andreessen Horowitz invested $15 million in MakerDAO in September 2018, less than a year after the currency debuted. This amounted to 6% of the company's total token supply at the time. This institutional investment also contributes to the stability of the coin's value. Despite the fact that Investors Observer believes DAI is slightly more volatile than Tether, the currency is rated as low risk. Binance USD, BUSD. BUSD, the third largest stablecoin in the world, is the next contender for best stablecoin, with a market cap of more than $14 billion. The New York State Department of Financial Services green-listed Bitcoin USD in August 2020. This means 4 things for cryptocurrency investors. First, Paxos Trust Company, Binance's BUSD partner, has enough reserves to cover every BUSD coin in circulation. Second, regulators keep a close eye on the reserves that underpin these coins. Third, all reserves must be held in credible forms, such as U.S. Treasury securities and FDIC-insured bank accounts. Finally, token reserves are completely independent of corporate assets. This means that they are distinct from any holdings declared by Paxos in bankruptcy filings, making the coins even more secure for investors. As a result, it's no surprise that Investors Observer rates the BUSD as low risk. TrueUSD, TUSD. TrueUSD was the first regulated stablecoin to be backed by the United States dollar. Of course, regulated is the key word in that statement. Trust regulations were put in place because Trust Token Incorporated, the exchange that issues TrueUSD, wanted to protect the cryptocurrency industry's trust by rooting out fraudulent and manipulative schemes. As a result, TrueUSD is a relatively transparent coin with a market capitalization of approximately $1.3 billion. Cohen & Company, a cryptocurrency audit and tax firm, has audited Trust's reserves completely. Many investors are drawn to Trust Token because it does not charge any trading fees on its Trust coins. However, Trust Token is not completely decentralized, and users must adhere to the Trust Token platform standards. Regulatory actions on the Trust Token platform, in other words, will affect Trust holders. USD Coin, USDC. USDC, like many of the coins on this stablecoins list, was created in collaboration with cryptocurrency exchange Coinbase Global Incorporated, COIN, and Bitcoin mining company Bitmain Technologies Incorporated. USDC, which was launched in September 2018, has a current market cap of more than $42 billion, making it the second largest stablecoin in terms of market capitalization. Grant Thornton LLP, a Chicago-based accounting firm, certifies the USDC reserves on a monthly basis. The reserves, while attested to, are not audited. This means that the company will verify the accuracy of existing data but will not conduct an internal audit. Investors Observer considers USDC to be a low-risk cryptocurrency, despite its volatility ranking being slightly higher than that of industry leader Tether. Terra USD, USD. The goal of Terra USD, according to its white paper, is to be both price stable and growth driven. Terra USD's protocol is supported by Terra, Terra's own native cryptocurrency. It's pretty simple how this works. The Terra platform protocols incentivize users to earn extremely low-risk profits when Terra USD's price is less than $1, by linking Terra USD to the regular Terra, LUNA, coin and allowing Luna to be exchanged for either UST or dollars, and vice versa. More USD is created when its price rises above $1, while the USD pool begins to contract when its price falls below $1, bringing the USD pool back into balance. This give and take keeps the Terra USD price stable in relation to the USD. It appears to be effective. Investors Observer considers Terra USD to be a low-risk coin, despite being rated slightly riskier than Tether and Binance USD. DGX Gold Token, DGX. DGX operates differently than the other stablecoins on this list. As a result, Investors Observer assigns a higher risk rating to this coin than to the others mentioned previously. According to the site, DGX is a medium-risk coin, which means that while the price may be more volatile, it is unlikely to be manipulated. Because DGX is not pegged to a fiat currency, its volatility has increased. Rather, each DGX coin is worth 1 gram of gold. This means that the value of the coin is determined by the value of gold. The price of DGX changes in tandem with the price of gold. Although this increases the currency's volatility, many investors who believe in the power of hard assets find it appealing. There are approximately 58,000 DGX coins in circulation, with a market capitalization of approximately $4.1 million. Another way to invest in the world of digital assets. You don't have to concentrate on specific cryptocurrencies to gain exposure to this market. Options for investors who are interested in the cryptocurrency trend but do not want to invest in individual names such as Bitcoin are expanding. In the episode of the Virtual Opportunities Show, which aired on December 21, 2021, full contributors Asit Sharma and Dimitri Kalogeropoulos highlight another investment opportunity that focuses on blockchain infrastructure projects. 10 stocks we prefer over Bitcoin. It can pay to listen when our award-winning analyst team has a stock tip. After all, the Motley Fool Stock Advisor newsletter, which they have been running for over a decade, has tripled the market. They've just revealed their picks for the top 10 stocks for investors to buy right now. And Bitcoin was not among them. Yes, they believe these 10 stocks are even better buys. Asit Sharma says, this was posted on CoinDesk.com. Polkadot Go live, capping years-long tech build for ambitious blockchain project, the headline reads. Now, I believe this is part of what Dimitri was referring to. You're either spending a lot of time in this space to understand all of the terminology and various investment opportunities, or you're learning about it slowly. That's the title, which I probably wouldn't have understood even a few months ago, let alone a year or two ago, but bear with me as I explain. Polkadot is essentially a technology that underpins and connects various blockchains. It has a technology called a parachain, which essentially means that you build a network that runs alongside a main network so that it can differ from the characteristics of the primary blockchain while remaining compatible and harmonious. In some ways, this resolves the issue of one blockchain technology versus another. Is Ethereum's technology better than Solana's? These are big picture battles, but there is plenty of room in the digital asset realm for different versions of blockchain technologies to coexist. They've basically been working on 5 of these parallel networks, or parachains. Acola, Moonbeam, Parallel Finance, Astar, spelled ASTAR, and Clover are their names. That last name, Dimitri, I think is a difficult one because Starbucks purchased a really great small coffee company that had designed a super advanced coffee machine with lots of variable controls. I believe they purchased it to eliminate their competitor, but that is known as a Clover. Clovers can still be ordered at various larger Starbucks around the world, as well as at financial institutions, so I'm not sure why they chose such a common name that already has different trademarks and usages associated with it. Nonetheless, these are really interesting names, and according to this article, the parachains are really centered on DeFi, or decentralized finance investments and loans. I wanted to talk about this just to show you an example of the innovation going on in the space and to show you that it doesn't have to be a winner-take-all environment. You are not required to attempt to answer this massive question. Will Bitcoin eventually be the most valuable digital asset, or will Ethereum be the most valuable digital asset, or will Cardano or Solana become mainstream assets in which everyone wants to invest? I believe that as time passes, there will be opportunities to diversify into a variety of different blockchain technologies and digital assets that will endure. I believe that some of these technologies are creating investable ecosystems. They're attracting capital, as you mentioned, Dimitri, as well as enthusiastic first adopters and engineers, and as they build, they're also becoming more aware of the various types of regulation that will be imposed at some point. Some of the newer technologies are attempting to design themselves in such a way that they will continue to function even if the big hammer falls. In this first article that I wanted to share, I guess my message is very similar to yours. There is a lot to learn, but you can take your time. My small addition to yours is that it is not a winner-take-all situation. If there is one aspect of the digital asset world that piques your interest as an investor, say, decentralized finance, then something like a Polkadot is for you, and there are other companies blazing trails in decentralized finance. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.